Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it together. And if you need help with anything, check out finding-value.com. That is where I dive deeper into all of these areas and topics looking for potential investment opportunities, sharing those opportunities with everyone in the community. And I do that through the midweek updates that we do. And I'll be releasing a midweek update later tonight or early tomorrow morning. I also give updates similar to this one with individual companies. If that interests you, check out the discount coupon code SPECIAL. That special coupon code can get you 50% off the first month only on a monthly membership, and a larger discount on a yearly membership. And you can always switch from a monthly to a yearly if you would like. Let's dive in and see what's going on today. So we're seeing continued weakness in the dollar, the DXY, down, down, down. If that weakness continues, we could see and are seeing money rotate out of dollar-denominated assets. That's why we look at this. So we're seeing weakness in the DXY, and it could continue lower, which means we could see further weakness in dollar-denominated assets like the S&P 500, the NASDAQ, and other assets like that. This is also a tailwind behind commodities that are priced in dollars, because when the dollar drops, the denominator of the commodity that it is priced in goes up if the dollar goes down. And that's where all of the commodity bull markets exist. Bull market for commodities, and we're looking for a potential bull market that goes down with the DXY. This is part of the real estate cycle and other cycles in history, and it looks good for that to continue. Looking at the 2-year yield, so what do we expect? We expect potentially yields could turn lower. We've got a pretty big move off the bottom here. We have a consolidation. Is this going to continue higher, or are we going to roll on over? In the short term, it is always difficult to know what's going to happen. In the longer term, when you back out, that's generally where it gets a little bit easier to see trends. I do think that this is broken to the downside, and we could easily see a move lower in the short term to this box that we've got going on over here. There's the box that I've got. I got to back way out. There we go. There's the box. So I do think that we're going to head lower over time, and I can't tell you the exact path. But to me, this looks like we could easily end up where that box is located. Why is that a big deal? Well, we've had lower highs and lower lows coming down into this bottom here of 2020. This was the bottom of commodities. It was also, coincidentally, the peak in this general area of financial assets. That's why it's a big deal. So now we are reversing that into a higher high and a higher low, wherever that does go. In the short term, when rates go down like this, that is generally where gold takes off. And what are we seeing? Gold is taking off. When did gold start to take off? Roughly when we start to get a peak in rates. And that's when the yield curve inverted and bottomed. It also happens to tie together. The 10-year yield, they're trying to push this lower. They could be successful. We could see a slowdown in this, and we could easily see a move lower. We could also break higher. Why is that the possibility? Recessions or slowdowns in the economy generally push interest rates lower. That is what they are trying to engineer. The problem is there's a lot of inflation in the system. So the bond market can be conflicted based off of a potential slowdown versus inflation in the system. Bondholders don't want to hold a 10 or 30-year bond with inflation in the system. But at the same time, if there's a recession, a good spot to hide is bonds. Who is right and who is wrong? We don't know. So what I'm going to do is I'm not going to worry about the short term. The longer term, bigger picture view when you back out is that a downtrend has been broken and we are making a higher high, and I don't know where this low is necessarily going to go. We are in a consolidation that's pointing downward, which is generally bullish for a move higher. So that's kind of what I'm seeing in the markets here. But we could very well go lower in the short term. This could be an A, B, C correction, and maybe we get down to the 3.8% area before heading higher again. So definitely a possibility there. The 30-year also coming up with something very similar potentially. If it does break down, I am not 100% sure that this is going to break down. We don't have a lot of selling pressure in here. So that makes me think that there's the possibility that this could still go higher. You go back to the 10-year, that could easily go higher too. I don't see big bearish engulfing yet, so we need to remain open. The TYX-TNX ratio, we are still at a very low level. Gold bottomed here at this inverted area, and gold's taken off ever since. Now, when this uninverts, if it does, it may not. It's a tailwind behind gold. If we stay inverted, we may still have gold rip. Why? Well, because of inflation and people's unwillingness to buy bonds. If they're not willing to buy bonds and interest rates go up, they may also be unwilling to buy stocks because interest rates going up provides, I'll say, they're less intrigued to buy stocks when the interest rate goes up for the risk-free return. So people are driving into gold, silver, and physical assets and hard assets because that's where the cycle is pointing to. TLT bond prices are up slightly, but again, we are underneath a pretty strong resistance, and we're also stuck in the mud. We've got a lot of overhead resistance, a lot of support underneath us, back in this whole area back here. The 2 and the 10, it's inverting today slightly. A lot of people are talking about this uninversion of this rolling over, and that it is baked in the cake that we're going to get 100% a recession. Well, that I'm not 100% sure on either. Why is that the case? Because they're releasing a lot of short-end bonds that may have pushed this up into this area. There's a lot of things that are being manipulated in these markets in terms of bonds and where they are releasing those bonds. So we'll have to see if this dives and breaks lower for confirmation. Gold's up $36.6 an ounce. This thing is ripping. It looks really good. We are creating a new high, and it's a strong closing. It looks good. We've got silver up 0.94%. We're getting some resistance. That's why we got these wicks at the tops that are starting to show up. Does that mean we go stick our head under a pillow and wish for the best? No, this thing looks good. I think we still have momentum to go higher. If gold continues higher, I do think silver is going to eventually break through this resistance area around 35-ish and rip. I mean, it could be a very big rippy is what I'm saying. So we're coming up into it with higher lows right into that resistance, and we'll see what happens here. We could see a very big run in silver. Platinum, we're up against resistance. Why is it such a critical spot? We've got a buttload, yes, a buttload of resistance coming across here. It's at about 1030, 1050, somewhere in that region all through here is resistance. If we break through this, this is basically confirming a bull market. And I'm sure they're trying to hold this down with everything they've got. That's why we've been squeezing for so long. When we break through this, we could see a release, and it could be big. So platinum's another one to watch here. We're getting real close to potentially a very big breakout. Palladium, I'm not as confident in palladium. This is generally the metal that runs counter, but this very well could run too. I'm not saying it can't, but it looks good and is positive to go higher. GDX up 0.63%, GDXJ down slightly, and SILJ up slightly. Silj is the earliest in the move, and I think this is the best value, and I think this will eventually rip way, way higher. I will be going through the midweek update, and I'll talk about a couple new junior companies that I think look pretty good. In fact, they look pretty insane. Lots of leverage. So I'll go over those during the midweek update, and I think Silj is pretty well positioned for outperformance. XAU to gold, these are the gold and silver mining companies divided by gold. And again, this is an opportunity that I don't want to miss. Why do I say that? We've never been this cheap. I think going back even in the 70s, I don't think we've ever been this cheap for gold and silver mining companies in relationship to gold. Why is that such a big deal? It means that this could be a huge opportunity and no one believes in it. No one does. No one. So that is a big opportunity because no one cares about it. And with the runway of how this ratio can move all the way up here, I mean, this could be a real big move. And one of the things to think about, I mean, just to talk real quick here, is the conditions that cause these types of moves are coming. What are those conditions? The conditions are an increasing interest rate environment where people don't want bonds. We can also see selling pressure in the overall markets like the S&P and NASDAQ. If and when this starts to move, people are going to FOMO into this because not a lot of other things are going to work under these conditions. It will be gold, silver, commodities, and if the mining companies can get moving, we could see ridiculous moves. So I think some allocation to this sector is warranted for myself. Crude oil is down 1.26%. We are still struggling to break out. Now, does that mean that we are going to fall lower? It is a possibility that we get a shakeout here. It is definitely a possibility. Now, would I sell if we break lower? No, I'm going to buy. Why? Because everybody's going to go short here, and it's going to reverse on them. It's going to be the slingshot that I talk about. How do I know it's a slingshot? Because I think we're here. This is what's coming. How do I know that? Because of interest rates, because of the commodity stock ratio, because every piece of information in the market is telling me that. And that's where big money's made. Coming up to TTF gas. TTF gas down 1.64%. We are getting a pullback. It is spring. We'll see how far back we go. Inventories are low. It doesn't look too bad from a zoomed in perspective. It kind of looks like a bull flag. So we'll see. Momentum is down, but it looks like it's trying to change here. We could easily break to the upside. Natural gas is up 0.52% in America, and we're back to support. And we'll see if that support holds. If I were to guess, it's going to hold, and we're going to continue higher. And we may chop sideways for a little bit, but I do think we're going to go on up. Our boy XOP, yeah, you know me, up about 0.6%. We are above support. We've made it back above support here. That's what that big wick is at the bottom there. You don't want to premature throw it out. You want to wait. I think we're going to go higher. Now, could we get a false shakeout here? We could. That is still a possibility. But I'm seeing people position money into these sectors here. So I think we've got a good chance of potentially going higher. But if a slowdown, recession, people are confused, maybe we get a small pullback in the short term, still possible. OIH down 0.02%, even though oil was down about 1%. Now, this is going to be a big deal. We're up against resistance. We want to break through it. What it's doing is it's pausing to look at crude oil. If crude oil does a shift lower, we could easily turn here and head down a little bit more. If crude does move higher and we start to break through this, maybe we work our way back up again. Time will tell. Newcastle coal futures are down 1.6%, and I do think that this could potentially be some sort of bottoming pattern where it becomes a double bottom. Potentially. It's early to call that, but we'll see if that transpires and plays out. There is positioning in coal occurring right now. Sprott Physical Uranium Trust is up 1.2%. It looks pretty good. Why would I say that? Well, we're squeezing and breaking right now. So I think this looks good to go long. That's my opinion. The uranium futures pricing looks like it's trying to turn. We'll see if it can turn here. We've got URA down slightly, and we're trying to turn around this momentum. Trying to turn it around. We'll see if we can get another couple of up days here. URANUM also broken downtrend. It doesn't look bad. It looks good to me. URNJ also small down candlestick. That is a bloody nose. What's a bloody nose? A bloody nose is a continuation pattern to the upside. We got it here too. Those are bloody noses. It's a tall green candlestick with small selling pressure. That means the buyers are starting to outweigh the sellers, and that the momentum is shifting to an uptrend. Looking at copper. Copper is continuing higher. Dr. Copper, what's going on here? It's the economy recovering. And it could be Chinese economy. It could be an American economy. I saw the manufacturing PMI going. That could be a contributor to it. This looks good to go higher. Looks real strong. Could go way higher. COPX up 1.11%. That's also moving higher. Looking good. Iron ore down slightly. It's not selling off and falling off a cliff. I do think we're going to head higher here at some point. We've got aluminum down 1.4%. What's going on with aluminum? We're still at resistance and it hasn't broken out yet. So we'll see what occurs here. We're getting stuck, coming right up into that resistance. Look at all those wicks. Almost like somebody's holding this down. Nickel up 0.5%. This is bottom and it's starting to turn higher. Looks good for a double bottom. Moving sideways. Not a bad candlestick. We're right underneath resistance. We're trying to break through it. We've got emerging markets down 0.5%. Still looks good. Small red candlestick. Still looks good to go higher. Coming up to a little bit of resistance through here. KRE down slightly. It's still holding on. Looks okay at this current time. We've got TAN down 2%. I'm not really doing anything with TAN. I'm just going over it. But this has pulled back quite a bit. I just don't know what's going to turn TAN into a profit-making machine. Lithium down 0.2%. I do think there's a good play here to move on higher. We are sitting on top of a lot of breakouts. This breakout here and the bigger breakout of that guy coming down. So I do think we're going to work our way on higher with time. It looks really good. REMX also looking good. Now we've come up quite a bit. We're coming up to some resistance through here. And that's our next goal, is to try to break through that resistance. Baltic Dry Index down slightly, down 0.66%, but we've been ripping it here and probably going to see a pullback at some point. We're also coming up to the average Baltic Dry Index level. XHB still down a little bit. We're in a downtrend. We did get lower yields just a teeny bit, but we're still in this downtrend, have not broken out yet. Russell 2000's down 0.89. It still looks okay. We still have a little bit of momentum. It wasn't a huge selling pressure move, so things are still intact and the downtrend is broken. SPX, we do have a kind of a tight downtrend. The steeper this trend line is, the less meaningful it is. Just keep that in mind. But we were down 1%, and it's still kind of holding on. But we could easily turn lower here. Momentum's to the downside. NASDAQ, momentum to the downside. We were down 1.7%, and this easily could get out of control to the downside. Momentum is down, and I don't see reversal yet. We've got SMCI down about 10%. This looks pretty ugly. Looks pretty ugly. We've got NVIDIA also down 3.35, and it does, to me, look like we could easily turn a head lower here. Easily. Bitcoin down 2.2%. A little bit of a wick at the bottom. It's not horrible, but this is an upward-facing pattern. It could be an inverse flag pattern where we do head lower. Ethereum also down, and this is another flag pattern, perhaps, where we could head lower for Ethereum. So I would be very careful looking at Ethereum and Bitcoin and potentially other cryptos. MicroStrategy heading sideways. Is this a consolidation? I don't know. We'll have to see. You could also draw it like this if you wanted to. And then draw this thing out. So we'll see. And I'm open. I'll see which direction this goes. The The VIX is coming on up a little bit. It's finding support at this support area. If this goes higher, that very well could be that S&P 500 moving on lower. Very well could be. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Use special as the coupon code if you'd like to join and try it out. I'll be releasing a midweek update probably late tonight for you guys to peruse, where I share my opinions and kind of share what I'm doing. I share the companies that I'm looking at. There's some pretty good areas to be looking at right now that people may not be looking at. But I tend to try to catch absolute bottoms. Sometimes I'm not successful at doing it. Sometimes I am. I like to think that I'm more successful at doing it than I am missing bottoms. And there are some sectors that are real low right now. Coal, lithium, and there's also opportunity still in some of the lagging companies in gold and silver. As you can see, they are ripping. So, but there are still some smaller, higher risk companies that are still way down that I would purchase. And I just did recently purchase one that is, I share all my purchases on the website as well. I did just purchase one small speculative company that is still down, and that is on the website. But that's what I've got for today, guys. So we'll catch you next time. This is Finding Value.